Welcome to this video on LLC versus S-Corp versus C-Corp. After 18 years of preparing business returns and handling IRS correspondence, we're here to settle the debate about which structure is right for your business. Entity selection is arguably the most important decision an entrepreneur makes. Getting your business structure wrong can mean overpaying thousands in taxes or facing an administrative nightmare. Here are the three structures at a glance. The LLC is simple, flexible, and has pass-through taxation, but comes with a high self-employment tax. The S-Corp offers tax savings via a salary split, but requires payroll and higher compliance. The C-Corp is a separate tax entity, great for scaling and investors, but has double taxation. The LLC, or Limited Liability Company, is the most popular choice. It's often called the chameleon of business entities because it's simple, adaptable, and the go-to starting point for most entrepreneurs. Legally, an LLC offers protection for your personal assets, such as bank accounts and home, if the business is sued. However, the IRS doesn't recognize an LLC. By default, you're taxed as a sole proprietorship for a single owner or a partnership for multiple owners. The big trade-off for the LLC is simplicity versus self-employment tax. The pro is simplicity, with profits passing directly to your personal tax return and no separate business-level federal income tax. The con is that all net profit is subject to self-employment taxes, which can take a hefty bite out of earnings. The S-Corp is the tax saver. It's not a business type you form at the state level. It's a tax election you make with the IRS for your existing LLC or C-Corp. The S-Corp election works by filing Form 2553 with the IRS. You pay yourself a W-2 salary, which is reasonable pay subject to payroll taxes, and then take distributions of the remaining profit as shareholder distributions. This structure maintains pass-through taxation, meaning the business pays no federal income tax. The S-Corp advantage is that distributions are completely free from self-employment taxes, while salary remains subject to them. When structured properly, the S-Corp election can save thousands of dollars every year, but it requires formal payroll and a separate 1120S tax return. The C-Corp is often referred to as the heavyweight. It's the structure used by massive publicly traded companies, but small businesses can use it too. It is a completely separate tax-paying entity from its owners. The C-Corp is known for double taxation. Profits are taxed once at the corporate level via the corporate tax, and then taxed again when distributed as dividends to shareholders, called the dividend tax. A C-Corp makes sense for businesses planning heavy growth and reinvesting all profits, those seeking venture capital, as VCs typically require a C-Corp structure, and for companies that offer extensive tax-free fringe benefits to employees. The bottom line for C-Corp is that they are best for tech unicorns, venture-backed startups, and companies planning to go public. However, double taxation makes it the wrong choice for the average mom-and-pop shop or solo consultant and other small owner-operated businesses. In this side-by-side comparison, we see how the three structures stack up. The LLC is low in complexity, but incurs self-employment tax on all profit. The S-Corp is medium complexity, but limits self-employment tax to salary only. The C-Corp is high complexity, with no pass-through tax, but is the most investor-friendly. If you're just starting out and testing your business model, a standard LLC is usually your best bet. Keep it simple and keep administrative costs low while you find your footing. The S-Corp tipping point is when your business consistently nets between $60,000 and $80,000 annually. Once you reach this range, evaluate the S-Corp election with a tax professional to optimize your tax footprint. If you're building the next unicorn, go C-Corp. If your goal is to raise venture capital, scale aggressively, or eventually go public, the C-Corp is the best structure from day one. The decision roadmap starts with an LLC for low costs and testing your model. Once profitable and netting $60,000 to $80,000, consider the S-Corp election. Finally, when scaling big with VC funding and IPO plans, the C-Corp is the necessary move. The golden rule of entity selection is that, quote, it depends on your specific facts and circumstances. Entity selection is complex, so always consult a qualified tax professional before making your decision. Remember these key takeaways. The LLC is simple, but all profit is subject to self-employment tax. The S-Corp offers powerful tax savings at the $60,000 to $80,000 plus profit level. The C-Corp is built for investors, but has the trade-off of double taxation. Your business structure should evolve as you grow.